We're just waiting for a few attendees. They're starting to show up there, so we'll just give them a couple seconds while that's happening. In the meantime, I'm just going to just got to click one more button. Well, that was a bit odd, hearing myself again and two echoes. Okay, we are now live. So first of all, welcome everyone to the KoreSummit Webinar Series 2021. Thank you for those who joined us this morning. This is the afternoon, 3:30 afternoon Eastern Standard Time. I'm joined by two great speakers, part of the KoreConnect's Core Partners ecosystem that we're going to have fun with RegA. So first of all, one of the co-founders and CEO, Sherry Noonan from Rialto Markets. I'll give her a couple minutes to introduce herself. And of course, one of the partners at CrowdCheck, Andrew Stevenson. So like always, the format for our webinar series is very simple. There'll be a 45-minute kind of discussion period. There's no PowerPoint presentations here. You're hearing the real people doing the real work, so you can hear them and understand. You'll have the ability to contact each of them. We will provide you their contact details so you can reach out. And for those who, as well, the entire webinar series is live on YouTube as we speak. So let's get it started today. And of course, ladies first. Sherry, please say hello to everyone.
Thank you. You're giving us all, giving us an injection of energy at this point in the afternoon. Thanks, Oscar. So I'm Sherry Noonan. I'm the CEO and co-founder of Rialto Markets. So Rialto is a FINRA registered broker-dealer and alternative trading system. And we focus specifically on the private markets, building out functionality in the private markets through the use and connecting with blockchain-based securities, which are digital securities. But we facilitate trading in RegA securities and other private market securities.
Thank you. Andrew.
Great. Hi there. I'm Andrew Stevenson. I am with CrowdCheck. CrowdCheck, we are sort of kind of a dual, sort of kind of a fee-for-service compliance and due diligence service provider. We are also a law firm, so kind of wear two different hats, and where we assist companies with preparing their offerings under Regulation A and getting them through from kind of a sort of initial thoughts on the process all the way through to qualification and beyond.
Perfect. So thank you. And this kind of leads, the discussion why we're here today. Everybody that is in attendance and those that are live, it's all about RegA. And we're getting excited, of course, because on November the 2nd, Commissioner Clayton gave us all a gift. It hasn't gone live yet, but we are waiting. And obviously, this is paying a lot of attention to everyone around the world, not just in the US, around the world, this great exemption called Regulation A+, that everybody is wanting to know about. So we're going to go right to the beginning, because it's important that we all understand what is regulation, the kind of historical element. And obviously, we're not going to dig too deep. We only got 45 minutes. So the idea is to kind of give you the overview of these items. And then keep in mind, everyone here, there are 72 other webinars that will go into more detail on each of these sections. So, and you can always reach out to the panelists that we have here today. So let's get started. Let's dig into it. So obviously the great news by Commissioner Clayton, Andrew, has been great, but for a lot of people, what is RegA? So a little bit history, where we are with it today.
Sure. So Regulation A is an exemption from registration under the Securities Act. So that's the legal premise of it. The fundamental rule for anytime you're selling securities to United States, to investors located in the United States, is that every offering of securities must be registered or exempt. So a registered offering it's like doing an IPO. So massive amount of disclosure, major requirements for the accounting and auditing, and then significant ongoing reporting requirements. Regulation A kind of cuts that down significantly. So it says, you know what, for these smaller offerings, this can be an exemption from registration, but you do need to meet certain requirements in order to utilize Regulation A. the Regulation A has been around for a long time. I think in kind of the initial time that the SEC created it, sort of, over 50 years ago. I think it was an exemption for like $100,000. But it's certainly in Post-Jobs Act has scaled up significantly. The Jobs Act created the classification to allow for Tier 2 offerings to raise up to $50 million every 12 months under Regulation A, under Tier 2. What Oscar you're referring to on November 2nd, and then just published in the Federal Register to be effective on March 15th, are amendments that will increase that offering limit up to $75 million every 12 months. And so companies will be able to use Regulation A to raise that amount of capital without going through a full kind of registration and IPO process. Doesn't mean the money's going to come in, but companies do have the opportunity to undertake that exemption. And then I think just one thing to note, because as Oscar, you know, that we probably do have participants watching that are not just from the U.S. Regulation A is an exemption only for accessing U.S.-based investors. It's not an exemption that will then be automatically allow for raising from in other jurisdictions. There may be, depending on a jurisdiction by jurisdiction basis, there may be some sort of analogies that would allow for reuse of a lot of the disclosure, but fundamentally it needs to be thought of just as a means of raising capital in the United States.
And if I can just jump in, so from a corporate perspective, what's really exciting about this is it really changes the way that companies can form capital. So if you think about a traditional company, how you would go out and raise capital, you sort of do your series, your seed round, and then your series A and your series B, and you might, avail yourself of certain tools. This is certainly quite a big tool to put in the tool set of raising capital from the public markets. And if your company is one that has a loyal network, a vast network, it's a great one to think about utilizing.
Well, that's an interesting point. So you caught me by surprise there, Andrew. I wasn't aware. I thought it was just Reg CF that goes live on the 15th. So it
was all part of that same rulemaking. So it's March 15th.
Okay, so we got to tell everyone. So that's good news. So that's even better. So see, you made my day. Look at that. I'm happy now. So number two, obviously we were touching on the investor, but I think it also needs to be clear. So there's what investor type you can attract, but you also, the type of company could only be at the moment under Regulation A. It can either be a US-based company or Canadian company. Just want to make sure that clarity is also there. There have been other companies from other countries utilizing it. There is additional steps you need to take to make sure you're fully compliant if you want to use this, correct?
Exactly, yes. It is an exemption that is limited to U.S. or Canadian organized companies with principal place of business in the U.S. or Canada. So if a company's sort of home base is in an EU country, they would need to either establish some operations in the United States or Canada that has its real own operations, not just as a kind of a shell subsidiary, but it needs to have its own operations, or just pick up and move over. And so those are decisions that are important for any company to think through before undertaking any drastic action like that.
I concur. Obviously, it's one of the necessary steps. And, as we were talking earlier this morning, it's part of a journey of a capital raising. You got to think of your strategy when you're going to do a Reg CF and combine them with a Reg A. It's very important that early on, to anybody listening here, at no time any of this information here is meant to be to not work with your legal counsel and your broker dealers and all that, to make sure that you're positioning yourself well right from the beginning to understand the full journey. Because one thing that I have learned is that there are times when companies think, hey, you know what, I'll just create that sub and I'll do it at Reg CF, and then they want to do a Reg A and it all blows up, right? Which one of your partners, Sarah Hanks, recently wrote an article about that. On the Reg CF, there's no qualification other than filing RegA, they're looking at the documentation and reviewing things. So let's talk about a little bit about that. So we've talked about the regulation. We've talked about, the great thing that it goes live March 15, 2021 for 75 million. So let's talk about the requirements, Sherry. So from obviously your firm being a registered FINRA broker dealer, what is it that is needed for a company to first file and then of course ongoing during the raise?
Absolutely. So usually when we're engaged by a company where it's a little bit further, they're closer to qualification, but they've already gone through audited financial statements. You'll need to clearly have a lawyer and a law firm that you've coordinated with. If you're doing handling a tier 2 offering, a transfer agent, and so you're going to need certain ecosystem partners around you, and some of those you're going to be required to have. Some of them you should have, just because as you grow, you're going to need them. And from an infrastructure standpoint, it's just good practice to build these infrastructure components in. So those are really the things that you need to have. What we see from a lot of companies that come in and talk to us is some of the first questions that we ask is, if they come to us and say, I'd like to do a RegA, is this the right time in your company's journey to be doing a RegA? Do you have the funds to do a RegA? Do you have the runway to do a RegA? And are you able to successfully complete a RegA and continue your operations? So those are two key questions. And then, do you understand what this means from you're opening up the kimono. There are going to be public filings that are out there. So you have to be comfortable with a certain amount of disclosure, which some private companies are not as comfortable with. Andrew, I don't know if you can expand on that.
Yeah, that's a great point. Sorry, go on, Andrew. Obviously, okay, so we talked about the starting point with the BD. Obviously, that's one of the requirements to follow the audited financial statements. Actually, Andrew, your firm, you guys do so many of them in the market. So what are all the elements? Because people think, well, I can cut this shortcut, that shortcut. There are no shortcuts. So it's
Yeah. So in many ways, it's going to be very what gets filed and what gets put together and filed for regulation offering is going to be very similar in some respects to what's in an IPO filing. So if you've ever looked through an IPO, seen all the disclosures or the financial statements, all the exhibits, all that's there for Regulation A offering as well. Everything just kind of a little bit condensed and with standards that are a little bit lighter, so a bit of a lighter lift. So very detailed disclosures about who the company is, what it does, how you make money. Who are your key partners? What's your customer base? If are you relying on a limited number of customers, or is it a sort of or do you have a broader reach? Those are going to be key disclosures. Your risk factors. What is it? What is it about the investment that makes it risky to investors? One way we often tell companies to think about it: what keeps you up at night? And that's the kind of information that needs to be provided to investors, not just to keep them informed, but to protect the companies. Because if there's a risk that is present that isn't disclosed, and that risk and the risk occurs, now potentially the company's liable. And I'm not sure exactly where some of the litigation has landed, but we saw that during 2020 with COVID-19, where companies were facing potential liability because of not fully because the risk factors that they were putting out into the public markets weren't fully laying the groundwork for the extreme measures that that occurred as a result of COVID-19. So risk factors are a major part. Your financial discussion, so in your management discussion analysis, what have your past results been? What's your how much money you currently have? How much more do you need to succeed? And then audited financial statements and exhibits. Those kind of all get put together. The exhibits are going to be critical as well, because especially if you're identifying critical partnerships, those agreements for those partnerships will need to be part of the filing, and that's an area that your counterparty may not want that. They may not want those agreements out there in public, and so it's really so these are things that will need to be sort of assessed and figured out before you really start really get going. I mean, it's always fun. The companies we get is usually it's like they start the process, and get a first filing in with the SEC, get comments back, we're preparing our amendment, and then a major sort of great business update. All right, we got this major contract, or we have this new space, and it's like, great. Yeah, that's important information to disclose, and now we need to file these agreements, and it's so that's another thing. So if that's happening while you're doing your Reg A, you got to make sure that counterparty is okay with information getting filed and made available publicly.
That's very interesting, actually, to hear that. So part of the filing, it's not just putting the business part, but it's all putting the external partners component to it. So we've identified, obviously, it's just like an IPO filing for full prospectus. You're going to have audited financial statements. You're going to have all the information of its offices. I've seen the checklist that your firm produces, about 57 pages long. So
not that long, but yeah.
Well, it is for us, maybe, because we keep adding the content. But
yep.
So we got those two major pieces. We then have the broker dealer so that's also an important element, because when the filing is put in, the SEC is reviewing both the broker dealer and the issuer to make sure that they're both working together. I think that's a really, for me, for shareholders or investors at large to hear that, is that it's not just anybody. They're both reviewed for the offering, right? So then, of course, there's the other elements that the company needs to have, which is the registered transfer agent component, in order to make sure that their securities are being properly managed externally. What other regulatory items are needed, part of the checklist that you're looking at, Sherry, as well, that you want to make sure are there from the ones that I've already said? What other ones that you're looking at?
Yeah, absolutely. So when you engage with a broker dealer, really you're working with the broker dealer under a couple of different value propositions. So from a regulatory perspective, it's really working on a lot of the logistics. So filings with problem states. There are a number of them out there in the US. We call them problem states. They're not really big problems, but they need to be dealt with. They need to be understood and dealt with. And I think this is an important concept when you're if you're a company undertaking a private market security, to really distinctly realize that it's not like a national market system security, where you don't have this federal overlay. There are the blue sky laws that are also applying. So you have to make sure that you're dealing with everything that needs to be dealt with, which can cause more paperwork associated with the raise, or more coordination effort that's needed. So you just need to be aware that there are some differences when you're handling a raise like this. So handling the filings, handling all of the dealings with those states, the actual blue sky states, and then general gatekeeping, so marketing review and review of materials like that. Also, all of the operational execution of the actual deal a broker dealer will handle, which includes managing the record keeping, which is very, very important, because if that record keeping is not adequate, one, your transfer agent's not going to be happy. But two, you're going to have issues when you do a future raise in the future. And if you should ever go public, or if you should ever have an IPO, it's going to be very difficult to go backwards and try and piece that information together. So it's all of that record keeping, and then all of the escrow and transfer agent management. And then lastly, the last component, and some broker dealers handle this and some broker dealers don't. So just be aware of it. It's the actual distribution of the offering. There are broker dealers that can work with you on the management of that.
Perfect. So it's great. So for those who are listening in, and you're doing the checklist on what you need. So obviously it starts with a lawyer. The lawyer's going to compile all the business you need, audited financial statements. So it should be noted that if you're an American company, it's GAAP. If you're a Canadian company, it does accept IFRS. So this is a really sweet way to operate. Then from there, we move into what Sherry's firm at Rialto, being a broker dealer. you will have an agreement with them. And then I heard, we heard escrow. So escrow is also one of the requirements as well to be included in the filing documents. Correct, Andrew?
Absolutely. Please, Andrew.
Oh, sure. Yeah. Yes, certainly. If they're especially if they're because if there's going to be a minimum on the offering, so that needs to be hit before the company can accept funds from investors, there needs to be a third-party escrow, and it's pretty important to have that. Again, also from a investor perception issue. If in your your use of proceeds disclosure and your MD&A, you're talking about how you need to have at least $1 million in order to execute your plan over the next 12 months. Well, no investors want to put money in if they're just going to be an investor if they're only going to be putting money into a raise of $500,000. Now they've just blown their money and they're going to be upset with you. So it's having that escrow minimum at your what your viability is, at least for the next 12 months, is critically important, and so it does require the use of a third-party escrow agent. And so one of the ways I like thinking about the brokerages and other professionals involved is in many ways it's like doing a securities offering for a company. It should be like buying a house for you to do personally. You don't have you're only doing it. You probably will only do it a few times in your life, and you know what? Go ahead and work with professionals who do this every day, because of all the checklists involved, all the things that need to be hit. That value add there is important for making sure it gets done right. Because it's like when you're buying a house, you don't want to be
I was wondering when either you or Sherry were going to say the most important piece of RegA or any of these regulation is the first crowd. And the first crowd is the lawyer, the auditor, the broker-dealer.
Yeah.
We don't talk about that, how important that is to bringing them all in, as you're saying, Andrew.
Yeah, it's a matter of doing it right the first time. We've seen companies that have had to go out and do rescission offers because it just wasn't done correctly, and basically they were required to do it by the SEC because they did things incorrectly in the way they executed their offering, and that's a lot of money to spend in order to give money back to investors. And so be able to avoid those outcomes is very important. And that's not even just considering potential liability, which companies do expose themselves to just by undertaking a public offering of securities.
No, I didn't want to talk about some of the area, but you're right. Having the right team, people who've done it, been there, is critical. There's always going to be people that say, hey, I can do it. But one thing is saying it, another thing, and the nice thing about RegA, all this data is public, available to the public. Edgar has it. You can see every law firm, and that's where you'll see firms like CrowdCheck. I think 48% of all the filings are done by your firm, and you can see that right there. It's not like it's hidden away from you. So if you have a name and you're not sure, and this is where the problems occur, and we've seen it firsthand. And ultimately, who pays? The investors and the company. The providers sometimes, they whittle away, and we get stuck with a mess because we want to make this effective. So I call it the first crowd. I think the first crowd is important. When people ask us, what do I need? Well, we make it very clear. You need a securities lawyer, number one. Number two, you need a broker-dealer. Number three, you need an escrow provider. So we make sure it's not even about the minimum anymore. What people need to know now, if you want credit card, you want ACH, you want wire transfer, none of these providers will provide that accessibility unless you have escrow. Because they know now the problems if you get the money directly to your account. They need a buffer, and the buffer is the escrow. And we'll get to Sherry's point here. And then, of course, there's the transfer agent. But these are all the things that takes just to get it filed, get the deal qualified, and then we'll get into the next part, going live and the other items. But one part that for many years, I believe, and just looking, the broker-dealer role was sort of like a commodity. And I hate that. Personally, I'm not a broker-dealer in any way. I'm an entrepreneur. but I hate it. It's no different than, some people try to treat lawyers like a commodity. It's not. It's a value add and enhancement. So I think it's important for people to know, because I know people are going to read the regulations saying, I don't need a lawyer. I don't need a broker dealer. I don't need all these things these guys are talking about. They're just trying to sell their services. We're not. We're trying to protect you. And so the role of the intermediary, I hate that word. I just got broker dealer, the FINRA registered broker dealer in a RegA. Sherry, I mean, the importance of it. Obviously you know it, but obviously for the audience.
Yeah, absolutely. So it's about making sure that, just like Andrew said, when you buy a house, there are certain things you should pay for, which is the professional. We always think about it from an insurance perspective. It's insurance to make sure that the actual execution of the raise is done correctly. That's what this provides. So it's, all of the operational execution around facilitating all of the payments, making sure that the investors that are coming in are vetted correctly. And that there's proper diligence and proper records kept on those investors, that all of the gatekeeping around marketing materials that are going out, any campaigns that are going out, that they're all fitting within the securities regulations. And then all of the filings in dealing with, the patchwork of blue sky regulations, just making sure that from a raise perspective, you're managing that raise from a national level. So that's really what a broker dealer does. This is I think sometimes what's missed is that this is a very complex set of rules. And so it can be easy to say, oh, we're just going to go out and we're going to raise some money, and it's really not going to be that hard. How complicated can it possibly be? It's actually quite complicated. There are lots of rules and lots of regulations that you don't want to trip over, because it's just not worth it. And there are people that can provide the service at a very reasonable rate. And this is really a new way to form capital that is, I think, quite innovative. So just put the infrastructure around it, and I really think that it's gonna take off, especially with the new 75 million cap.
Yeah, with the increase, I agree. And you said something that I really like, and I often say it in my presentations. I always tell entrepreneurs, working with a broker dealer is the best insurance policy you will ever have, because what you're getting is a protection. So first of all, there are, I think it's 7 states, right, Stephen? 7 states that, right? Okay, so 7 states.
Yeah, varying degrees of problem.
Yes, thank you. Varying degrees of problems. I like that. That you need to be careful with, because if you don't have a BD, well, you are violating that particular state. So by having a broker dealer that's registered in all 50 states and has the ability to do the RegA business, so you even have to qualify the BD. Not just every BD can do this. They're doing all the work. They're doing all the compliance. They're making sure marketing is done right. I'm watching Rialto with one of our clients. I mean, weekly meetings, making sure with the lawyers, with everybody in the room, to ensure that the success of the offering is not just on the primary, but ongoing, because the other holy grail of a RegA, we're now introducing secondary market trading. So if it's bad here, it's never going to materialize over there. So it's the insurance policy, ensuring that the investors are being vetted in properly with the right information. And I think that's the critical piece with RegA that I think for a short period of time was dismissed as a commodity, as, hey, I'll just take it if I need it. We make it a requirement as a standard in order to bring a healthy environment for everyone, the lawyers, the auditors, and all that involved in this process, which can be very difficult. So,
just to add one thing into that, I think we're also seeing there's a greater sophistication on the part of investors who are investing in companies that's selling under Regulation A. Because early on, I mean, definitely we had some big hypes, some big companies without kind of much much of an ecosystem around them. But now I think it's seeing the companies that don't have that ecosystem are not doing as well. I think investors want to see that ecosystem, which is help drive the because part of it is a sort of indicia of legitimacy. It's assurance that that the ownership of the securities are going to be recorded correctly. It's sort of a greater possibility of a future liquidity, and those are all kinds of things that investors are looking for that come with having that full ecosystem.
I agree, and it's so I think it's just as important with everyone to know. So now this is you now have all the requirements. We went through it high level. Now we're going live. And there's another piece of a RegA that quite often people don't. So where does the traffic come from? Where do the investors come from? So I'm going to put Sherry on the spot because often people think, well, I'm going to have a broker dealer. They're going to bring me the investors. So let's talk about where that comes from.
You need to budget in an investor acquisition firm. So that's probably, depending on the type of business you're in and depending on the type of network you already have. So, you will probably know, or at least have some sort of sense of if you can organically reach out to the network that you've already built through building your business, and, start seeding the raise through that existing network, and through existing investors. However, at a certain point in time, it behooves one to engage the services of a investor acquisition, and that can get expensive. So it's important to really understand what the different firms do, and there are a number of really great firms out there that handle this, and they're really quite spectacular at understanding digital marketing and really targeting certain advertising and targeting certain investors. But it's important to understand the different offerings and the ROI associated with that spend. So yeah, that's how you're going to go out and get those investors. Now there's also the platform. So there are platforms where you can have your raise on a platform with a variety of different securities. That's another model. So you can also do both, unless the platform doesn't allow that. So it's becoming more flexible, and there are pros and cons with both of those models.
No, I agree. And so this is an area that obviously in other webinars we'll go in more detail, but the investor acquisition, there are different techniques, and there's no one technique that's the end all. It isn't. I can give you every example of every successful opportunity that's done it is used 2 or 3 of the techniques on an ongoing basis, but you do need to budget properly. I think Sherry nailed it, that to assume that you just have an offering and it's qualified, you got the lawyers, you got the BD, and they will come. I'm sorry, they won't. They need to be taken there. And in some cases, we're moving the evolution of the RegA now starting to have the broker dealers sell it. See, this is a new transition that is going to occur where broker dealers will actually be right at the front lines, because some offerings will require that, because some can sell by themselves. Hey, you have a drape, I get it, up and down, it's easy. But maybe you got something a little bit more challenging and it needs to be described. So why this is important, because there's going to be the A to Z in companies, right? We can all agree on that. There's going to be the traditional companies, manufacturing, technology, and all that, but there's going to be all different sorts, and we need to understand that the regulation is flexible enough, and there's going to be providers. So investor acquisition is a very important element that you need to budget for. It needs to be part of it. If you don't, you're in for a very long haul process where you may not succeed. So that's why you may want to do a Reg CF beforehand, as most do, right?
Yeah.
That's exactly right. And that's a good strategy, depending on where you're at. Again, getting back to the beginning of the conversation, depending on where you're at from a corporate maturity perspective, starting with the Reg CF is a great way to at least understand the beginning of this, but please understand the rules between Reg CF and Reg A are different. So don't be surprised when you come back to Regulation A and it's a different ballgame somewhat.
Yeah, great point. So in our last session, obviously a lot of people are curious on how to use Reg CF and Reg A, right? So we're seeing that. And Andrew, I know our two firms are working together, a number of clients that started with a Reg A, now they need to do a Reg CF to get more funding. So isn't that great to be able to switch? But it's got to be very clear. These are for American-based companies. So again, I need to put that warning up there often, because for Canadian companies, our path is not as the same. And I know, yes, I can create a company in Nevada, Delaware, and all that, but I assure you, you will come to a hard stop on your Reg A. So it's important. So we've talked about what the requirements are, who the players are in the crowd. Okay, so let's talk about some of the known issues that we can safeguard everyone. I know, Andrew, you talked a little bit about them, but without, obviously, we don't want to go into naming clients or anything like that. Say things that can help these entrepreneurs better prepared coming to you, that is going to make the process go from here, to get it as fast as qualification as possible.
Yeah, and I think the biggest issue that we encounter for a lot of companies is just audited financial statements. If a company hasn't gotten used to regularly preparing sort of internal financial statements that are compliant with the applicable standard like GAAP, or then it can be very challenging to get to the point of having statements that are even ready to be audited. And in the timeline from engage, sort of kind of from go, can be drastically drawn out if the auditors cannot complete their work. And depending on the time of year, if the auditors can't complete their work, it may sort of trigger that you actually need an additional set of audited statements. One company work with a company with an existing, in some ways, so new businesses are easier for the audit than existing ones, because especially on the sort of the inventory requirements. And that's an area where we're seeing that auditors just not able to finish their job, do their work, because there weren't sufficient inventory controls at sort of a past fiscal year end in order to make an unqualified audit opinion. And so that's actually, so we've seen offerings have to get delayed in order to basically get to have a new year for an audited statement. So so the ability to get that audit is going to be a major issue, and so much of the audit drives a lot of the disclosure. So the audit is and it's not just plug and play. So the audit is the figures, but the disclosure needs to provide context to those figures, and so they play off each other. It's not just the disclosure in the MD&A is not just a recitation of the audit. But having that audit done is critically important for the overall timeline of an offering.
You know what, Andrew? I'm glad to hear that. I'm sorry, I'm sad to hear that, but I'm glad people should be listening to this, because you've been to a lot of our course. I'm in Sherry as well, but we don't talk about the audit too much. Do you know what I mean? It's sort of like, oh yeah, you can get it done. But now we're hearing something very different. Yeah, you can get it done, but it's a timing issue. It's whether you're a current operational business, you got fun. And if you haven't done this before, this could be, you think it can be done in 30 days, but it could take longer.
Yeah. And time here also matters too. Say
Yes.
if you're starting your audit in sort of if you're a calendar year fiscal year and you're starting your audit in March, don't expect to get it back until June, just because accountants are going to be going to start being overwhelmed. And if it's not back until June, then it's likely you're also going to need interim 6-month statements before qualification. And so every instance that pushes back the dates of when you can get your financial statements, can trigger the need for additional financial statements and additional disclosure.
That's a great little, and of course, Sherry, from your end, I mean, what have you seen that it would be great for the audience to keep an eye. Obviously, you're the broker dealer. You're getting the finished product sometimes, or maybe
Yeah.
not.
But it's timing and expectations around the raise. So when you go out with a raise and you say, I'm filing for a $15 million raise, that does not mean you're going to raise $15 million. It means you are filing and you can raise $15 million. But I think, a lot of times there's a lot of work put in upfront around the infrastructure and the filings, and that's fantastic, that's required. But once that's all done, that, the expectations around the raise really need to be tempered, and there needs to be sort of a bear case and a best case built so that you are your runway will be able to withstand a raise that maybe gets hit by COVID, and gets hit in the middle of COVID, or something happens that's unexpected, because if we know anything, we know the unexpected is always going to happen. So that's something that we've definitely seen where, companies come to us and we're in the midst of a raise, and they've budgeted, okay, this is going to be over in 4 months. And we're saying, no, I mean, it's going to be 9 months, it's going to be a year. And they're just thinking, I'm going to, my raise is going to be spectacular. Everyone's going to love my baby. And that's what we've seen. And I mean, everyone's baby's great, right? But
what are you talking about? My baby is the baby.
Everyone's baby's great, but it's really important, and it's really more of a risk mitigant more than anything. It's a risk mitigant to step away from the situation and say, what's the worst case scenario from a cash flow perspective? What do we have? What are our backup options? Should this raise not go the way we want it to go? Because the last thing you want to do is to, have invested the money in a raise and then be squeezed somewhere else.
No, I agree. That's most of us don't want to think of, the A/B scenario, but you do. And more importantly, I think this is kind of a wake-up call to the maturity of the ecosystem that we have within the CoreConnex environment, is that as members of it, we can now come into a deal, and we all have to be consistent that, yes, we want them to move, but we also have to keep these things in mind. This thing with the audit has really it's rattled me a little bit, not in a bad way, but in a very good way, because I've always known that if we're a fresh company, boom, you get them done and it's pretty simple. But you're an established company like us, you got a few years down the pipe, your audit is going to take a while, right? And the likelihood that whether you've done it or not, and whether you prepared financial statements, not whichever order you choose, there's going to be a time element that you have not anticipated. They'll give you the best case scenario, 60 days, but again, with that one, you got to plan worst case. And then with that, how does that affect your marketing, pre-marketing before your offering and things like that? So I think this has been very helpful for everyone today to get an understanding. So you heard what you need. So just to recap for everyone, again, going live March 15, 2021, raise up to $75 million. You're going to need to do a Form 1 filing where, again, we advise you, please speak to the experts. We'll provide all that information for you. Make sure that when you're doing that, you're bringing all the other elements that you need into that, the broker dealer, the escrow, the transfer agent, and you can talk about the technology and the marketing next. This is the meat, the audit, all that. You got that wrapped up. As Sherry said, you can plan. As Andrew said, we can know exactly, that way you have great expectations of when you can go live. Because the last part is delaying your offering and you got everybody else waiting and blaming it. It's not an issue of blame, it's just things take time. So, and knowing the pitfalls are just as important. So one of the things we have here is that we give you an opportunity, those who are here live with us, to ask questions of Andrew and Sherry directly. So all you need to do is hit the button that says raise hand, just like we're in school. You go and click it, and it's your turn now to ask questions. And there's Thomas, he's all the way. Okay, so we're gonna allow Thomas to come in and ask his question.
What's the average cost for using a broker dealer?
Sure. So 1% in general, 1% to handle the, oh, Thomas didn't leave. I hope you didn't leave, Thomas.
No, he's still here.
Okay, perfect. So in general, it's 1%.
Yeah,
And
and so
from an acquisition, from that's X investor acquisition. If you're engaging a broker dealer to handle the investor acquisition as well, that's a separate charge. But just to handle all of that operational AML KYC, all of the operational infrastructure and record keeping, that's fairly market standard. Andrew and Oscar, you can comment.
yeah, say for the investor acquisition side, so actually having the broker dealer act as a placement agent as well, is typically going to be in the so kind of what we've seen is sort of kind of 6 to 8% range, and sometimes that's in addition to if they're also kind of on the so work on that processing side. But that's going to be so it's still all going to be just on whatever is sold. Typically, you're not going to find any at this stage in the market. Maybe that will change with being able to raise up to 75 million of broker dealers or investment banks actually undertaking a firm underwriting, which would then that would change, be a very different landscape as far as what is sort of taking a discount on and versus percentages. So, maybe we'll see that in 2021. Who knows?
No, I agree with you, Andrew. There is a model that we have. I mean, right now, Sherry said 1% is the going rate. Broker dealers are trying to find the value add, whether it's distribution, adding what's going to, obviously they want you to succeed. So it's not like they're just trying to take their fee. And as Andrew said, they don't get paid unless deals close. But I do believe a hybrid is coming. I think he's right. Now that the dollar amount has stepped up to 75 million, we're moving in a very interesting market where somebody will underwrite it all. And if they're going to take it, you've got to expect to pay more because you don't have to do any of the legwork. They're just basically saying, we like this offering, we're going to do it. So I think that's a very good sign of the industry maturity, and we're moving in that direction. All right. Are there any other questions here? Anybody else? Put your hand up if you got questions. Don't be shy. Yeah, nobody's going to bite you. Well, I just might. But hey, listen, it's Tuesday, and we're trying to bring everybody the most the most information we can in a very short period of time. This goes without saying that you need to speak to all the right people and bringing them in. I'm going to leave everyone obviously with some component. Sherry, I'm going to ask you this because you've been doing it a lot. You obviously, with one of the clients that we're mutually working together, there was an interesting role that your firm played in it that I'm not going to call it the quarterback role, but you almost did, because one of the things that your firm was doing a lot was bringing everybody together on a weekly basis, because it was a qualified offering, right? But there were changes as that was occurring, right?
Ooh, flashbacks. Yes.
Yes.
So that is something, I mean, to be aware of, in while you're in progress. One of the reasons to establish yourself with a good team up front, a team up front from a legal, from a broker dealer, from a transfer agent, and perspective is, and have that team in place is, if changes happen, which happened with this particular client, there was a change midstream, post qualification, but mid raise, and that required a lot more. It was a delay in the offering. It required a lot of remediation from the standpoint of everyone getting together. And we still, I mean, in general, with the offerings that we run, we do work with the issuers and touch base regularly as a team with them, but it's fairly intensive depending on if there have been issues or if there are lots of changes. So once the filing, that's why it's really important from a legal perspective. As the filing goes in, there might be some changes, but the more changes there are, the more balls in the air, I guess.
Well, let me give you one example. I mean, I'm not trying, but even with all that many people in the room, and why I'm bringing this up is because bringing the crowd in is important to keep everybody on the same page. But even with the smartest people, little things get missed. I mean, in this case, dividing the price of the share,
Mhm.
it was done incorrectly, even by the regulators in this case. And so everybody's got to be paying attention, because it's a ripple effect for everyone, the lawyer, the auditor, and that was we hadn't seen that before in RegA, and your firm really stepped up to the plate there. And I think it's a new model that we're encouraging companies, like I know CrowdCheck is all over this, where those listening to this today, is that when you start this process, you may start it with one company, and as I start bringing all the other meetings, everybody's part of it. And if they don't want to be part of it, you've got a problem right there. I'm telling you, this is something that these two, Andrew and Sherry, did not speak, but I'm telling you right now, whenever you have lawyer, auditor, broker dealer, investor acquisition, transfer agent, and you can't get them all in a room before you're going live, you're going to have problems. I'm telling you that right now, because it's so many of these little things that are going to get missed. And if everybody's on a different page, believe me, it's only going to be the mess. You're going to get stuck with it. And we've seen that. And this is how it's helping us go forward, having these kind of, meetings with everybody, so everybody's on the same page, right?
Absolutely.
Andrew, any closing remarks on RegA for 2021 from you? Where do you stand with things going forward?
I don't think, 2021 is going to be an interesting year. We're a few years into kind of the drastic change that came about as a result of the Jobs Act, creating Tier 2, which does have so many benefits. And with that limit going up to 75 million, except so often I still come across kind of just general industry research and seeing these like IPO filings for $50 million. And it's just crazy why you would spend that much money to do an IPO when Regulation A is available as well. And these are companies that aren't even going to be exchange listed. And so I think we'll potentially start seeing some of that, some of that change, and probably from some other participants in the space, some of the major kind of online platforms that also do the placement agent services and marketing for companies. They were having kind of banner fourth quarters, and so I think there's a growing acceptance from the investor base, which should translate into more success for companies approaching Regulation A from different directions, either going with a platform that can provide that full service, or going through doing their sort of with a with just a marketing agency, just marketing services, and then a broker dealer sort of managing the back end. So we'll see what happens. So,
you're right. Fourth quarter was good. Sherry, so for yourself, where do you see 2021 with RegA?
Well, you hit on my favorite point. So what we're really excited about is the fact that RegA is really meeting the maturity in terms of allowing for secondary trading. And we've really built out the infrastructure for that. So that's what we get really excited about, is now opening that infrastructure up. So
I couldn't disagree with you more.
Yeah,
I agree.
Giving investors really the opportunity to monetize their investments in this ecosystem, in this realm, is very, very exciting. So that's what I'm looking forward to.
I think, you couple that, it's amazing. When you look back, Andrew, when RegA first came out, all we were trying to do is figure out the legals, figure out the invest button, figure out the back end. Look where we come. We've figured out that. And now and yet the regulation did have the liquidity, but we couldn't, it was just too early. Now we have it. It's here. $100 trade will be able to happen on a registered secondary market platform. It's really exciting. So for those new companies that are going to use this regulation, you can now say with no hesitation that it's there, right? The venue is there. It's going to take time, just like RegA took time to develop. It's going to take time to the next stage, but you're going to be the front runners of that. And it's going to be an exciting 2021. So I want to thank everybody this afternoon for taking graciously. Sherry, Andrew, thank you so much. Great partners in our ecosystem that have been helping companies in the RegA space. And for the rest of you here waiting with us this afternoon, we want to thank you, and we welcome you to attend the other 71 remaining webinars that are coming up. The next one is on Thursday, 11:30 a.m. What do you need for a Reg CF offering? That's right. So we're mixing it up. You're going to hear from different panelists. But until then, thank you. Have a great week, and we look forward to talking to you very soon.
Great.
Take
Thanks,
care.
Oscar.